everyone, welcome to the Stock Market Morning Prep video for Tuesday, August 4th. A little bit of pressure continues in the S&P and the broad-based markets, so we are looking for continued downside. We did have one decent move right around 11:30 yesterday, where the markets actually just kind of flushed all the way down for about an hour or so. So if you weren't there in front of the screens or you didn't catch it, you probably missed it because it was kind of fast. And then we had a couple of small moves lower, trying to push the markets lower at the end of the day. But pretty much that was it. We kind of summed it up in one move right around 11:30, 11:50. So where do we go from here for today? I'm going to continue to start. Now I'm starting to look at the sell rallies. Started off yesterday with a neutral posture, waited to see where the markets were headed, and sure enough, we try to break higher into main pivot areas of these indexes and failed. And that's where we look to start picking up some short trades. Today we're going to be looking to sell rallies again. We'll see where the markets are headed here, but to me it's anybody's guess. I started looking at the seasonal trends for August, and surprisingly utilities come into favor, and natural gas. What we do have is exploration stocks too, so oil stocks, exploration and production stocks actually come into favor between now and August. So looking for crude to get, I'd love to see a big flush in crude and a nice big spike lower in gold, because the commodity trade they've just been getting hammered, really unsustainable at one point. So we're going to look for a big snapback rally. So I would pay attention to some of these oil stocks, guys, that have really been beaten down because of the commodity itself. Exxon reported the other day, Chevron reported the other day. Maybe look at some of the bigger players that really are well hedged, well leveraged into this oil trade. So it's something that I'm going to be watching and looking at. Utilities as well. It started its move. You can look at the XLU, which is the ETF. UNG is the natural gas ETF. Be careful with Contango, though. Remember, these ETFs, they have to square positions, and if the cost of squaring is more expensive, well, then they have to get it somewhere. They mark down the ETF. So just be very careful with that. And then what comes into some weakness in August is discretionary stocks, materials, industrials, which I showed you the head and shoulders pattern, and financials, which is interesting. All right, they are the weakest, losing about an average of 1%. So those are some of the sectors I'm going to be paying attention to and looking for any additional plays in that sector. Okay, want to go into the indexes. Really, guys, not a lot happened here. You could see where we are. I'm still suggesting that after this little round of weakness, I think the market just grind higher into September or maybe even October, get a big push higher, get everybody short now, and that short covering round is going to fuel that euphoric buying where I think we may be putting in a top. Again, we shall see, still a little bit early, but that's what I'm looking at right now, and things do change rather quickly. Spiders, daily, you can see here we broke below the 50 and closed right on the 50. That is a good sign that selling was, and by the way, the selling was very light as far as volume, so I was not really convinced myself that the markets were going to be headed down that low that fast. And sure enough, it snapped right back going into the last couple hours of trading yesterday. So you can see here pretty much average volume. We're not overbought at all by any stretch, or oversold in the RSI and of course the MACD. Take a look at the transports. Transports actually was the bright spot of the indices yesterday. It was doing rather well and held up pretty much all day. And again, still be above, the downtrend line here, where we broke this bearish symmetry of lower lows and lower highs. So that's a nice thing. So now we're basically sitting right on top of this area, and we need to see now we can break this little consolidation we had for the last 4 days of inside trading days. We could break at least to the 200. Ideally, we'd like to see us break above the 200, then 155. Then I could see us moving higher yet again. Remember, this is the leader of the 5 indices that we follow. IWM really took it on the chin early on and then started to rally back up. You could see we hit the 200 and bounced off the 200 right to the penny. So that's something that we're going to be paying attention to here. This is important, guys, because if the Russell starts to break down as well, the Russell 2000 is a great gauge of risk and investor sentiment as far as taking on risk, right? So if the Russell starts to break down, and remember I mentioned several weeks back that Russell topped couple months earlier in 2000 before the sell-off, and then again 2009, 3 months earlier. So this is something that we're going to really keep an eye on. But if you could see, we've gone really nowhere. Other than, of course, that big move from January, February, we've been in a range since February since this year. So we've gone about 5-6 months doing absolutely nothing, just kind of gyrating and chopping around here. So not a great trade at the moment, but I want to see this thing break down or break up higher, and then let's see where this market would be headed afterwards. Diamonds again broke down below the 200 on Monday, and Friday, and then Monday we had this big flush lower. Ended up closing within this horizontal channel here, you could see, and again really haven't gone anywhere since February. So this market really has to make up its mind where it wants to go. I mean, it is just brutal out there when you have this type of trading. You know, market goes nowhere, these bunch of dojis, and there's no volume out there. That's the problem. However, it doesn't last that long. Remember, it will eventually start to get good again, and that's what we're waiting for. And I do think that we're going to have a pretty decent end of third quarter and pretty good fourth quarter as far as trading is concerned. Take a look at the Qs. Lastly is the Qs. Watch, you got to watch it. Like the Dow obviously is heavily influenced on Apple, as we know now, like it did with the Qs. But also Apple is spread around a lot of these ETFs, so you got to be careful with. Apple broke some really key support yesterday. I want to see if Apple bounces, and then if that bounce fails, I think Apple could add a little fuel to some downside pressure again. So kind of keep an eye on some of the big cap names here, especially Apple, which is really a big factor in a lot of these ETFs. Okay, heavily weighted. All right, guys, that's pretty much it. Let's see what happens today. Again, keep an eye on some of those exploration stocks. Watch what crude oil does here. If we can get a big flush lower, and then I think gold breaks 1,000. I'll be honest with you. There's really no reason to own gold at the moment, but anywhere below 1,000, really 950, 980, 970, anywhere in that area, I would start looking to pick up the bullion or even buy the GLD, the spiders, if you want to just start accumulating, because that's really a decent buy down there, especially if you get a very large flush where just kind of unsustainable. That's something that you want to take a look at. Okay. Hope it all helps. Have a great day, everybody, and we'll speak to you tomorrow. Take care.